The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And it's a beautiful November 27th at the headquarters of Technical Trading and Investing, TFNN.com. Kind of have a little hangover here from the Thanksgiving vacation cycle. Had lots of my friends and family down, and they gave me the gift that would keep on giving all the way through the weekend and into yesterday, which is the blessed cold from you northerners coming down here to the south, giving me the gift that just keeps on giving. Anyway, if I nod off during the show, just poke me with a stick and wake me back up. But I think I'll be able to make it through. I will soldier on, and we'll try to have the best time we can. It is November 27th. We're getting kind of close to the end of the month. Getting in that radar range of getting close to a fun buying season, so there'll be a little bit of bias out here. I see kind of a bifurcated market. The market bounced just about exactly where we thought it would, which is right around that 1346 to 1356 area that Confluence showed that it would. We bounced up. We're pretty much into that range at 1408 that showed pretty extreme resistance levels. What do we have here now? Oh, let me update this real quick so we can get a current volume. 1305, we went to 1409. That resistance level really comes in strong at 1408. We have about 2 billion shares so far, so another light volume day out here. I would suspect that we might have one little spike. I'd like to see that spike come with light volume to pull the trigger to go short again. So basically, we've got one position in the newsletter and it's doing okay. I suspect by the next few days it'll turn around and continue its move higher. But we'll be watching that closely. Right now, I can't see having a lot of money invested on the long side. If you were long, a pretty good opportunity to take some cash. I would probably be long a couple of stocks, and it's a real bifurcated market. But this means we're going to have a lot of action. It reminds me a lot of 2000, 2001 when the tax changes were coming into effect that we're fighting over now. We saw a lot of people holding those stocks into January 1st. Actually, it was January 3rd that year. We saw stocks like Qualcomm absolutely crater, but everybody was holding them for the 15% differential if you sold in calendar year 2001 instead of 2000. So what happened? Everybody went absolutely nuts. Qualcomm went from split adjusted was quite different, but I think it was 200 to about 135, and just I don't know, 6, 7 trading days. Just got decimated, and everybody was the same thing. It artificially blew up into the end of the year, only to be sold off very heavily after the next year. Now, this is going to be a little different as we have ex-dividend dates on a lot of these stocks trying to get ahead and do distribution this year on the lower tax scale than we'll probably most certainly have next year. So they're scheduling those for like the 27th, 28th, 29th. I suspect we're going to have a lot of action right before the end of the year. And the whole issue of what happens with when those dividends come out, do you want to be short before then or short after then? Now, will all the selling be out of it? It's going to be a very interesting, and I think very volatile end of the year. Normally, when we don't have any action, you're going to have these stocks moving quite a bit as the dividend comes out of the stock. You actually see some movement normally when we have almost none. So the idea would be get your dividends, sell the next day if you can still get it in the end of the trading days, and actually also get it in and have it clear so that you can have that in the same tax year. I'm going to have to probably call up our friends at Green Tax Trader and find out exactly how that works out, because normally I don't trade the last few days to avoid this issue. But you'd have to get that trade, I believe, back in within 3 days of the end of the year, as long as the clearinghouse actually clears it through your account. But that's the way it's always been in the past. I don't know if it's been any different. I've not run up against this because normally pretty good time to stay away. This year, we could have some very decent action in the last few days on all these dividend stocks as they transition from pre-dividend to post-dividend. Some of these are putting out some healthy dividends, and a lot of them are accelerating them a few days. A lot of these dividends were going to come out in the first week of January anyway. They decided to just push them forward to the last week of December and get them in this tax year. But it's going to be kind of interesting because once you're out of that dividend, does it make sense to just go ahead and sell the stock at the same time? My guess would be good if you can get it in the tax year. I'm wondering if they're not thinking that by putting in this in the 28th or 29th, in fact, that's a good thing to do, is check the calendar and take a look at it. Let's see. December. Well, if they put it in the 28th, I wonder if you have to have 3 calendar days. I'm going to have to check that out with the clearinghouse and see if you can actually sell something. If you get a dividend date of the 27th or 28th, sell it that dividend day and be able to actually go back and claim it in this tax year. That would be very interesting. But I suspect they're trying to put it in on that 28th or 31st date just for that reason. Yeah, you'll get the dividend certainly in that tax year. Now, whether or not you're going to get the tax sale in that year and through the clearinghouse is another story. It'd be very interesting. I haven't seen anybody really write any articles on that yet, but certainly going to be a tax issue and how quick you can get out. Because if you could do both, probably a pretty good deal if you don't have to take a hit on the price of the stock itself. But we're going to have a lot of these currents come through the end of this year. What do we have going on right now? We had our pop. It came on lighter volume. We haven't had any real follow-through that we can speak of. We had a reversal day. We had one strong day with decent volume, but not confirming volume. And we've had, I guess, 2 sideways days. I suspect we're going to try to take one more day and blow through that 1408. And my guess is that we're going to have no volume. We're probably going to see the same kind of reversal that we saw off that 1343 low. And we'll have to see how that works out. In the news, well, what do we have? Actually, I've got the, what is this? This is the absolutely wrong one here. Maybe that's why nothing seemed to work out. Let me restart this. But in the news, I had several things while I'm getting this back up and running. And that is, let's see, right here. One of the more interesting things is Apple's firing some more people. This is kind of the second round of firings after the first round a few weeks ago. Basically, the gentleman that was running everything, Scott Forstall, pretty much was kicked out, pretty much running his underlings out now. And a few of those are coming across the wire just on my drive in here to work today. I don't think they're going to make a big difference to the stock now. Everybody's got a pretty good idea of what they're going to sell through Christmas and Apple. You've gone down there and touched the low. You've shaken the shorts. A lot of people probably, if they haven't sold already, probably going to be tough to get them to sell through the end of this year. But you do have Apple at that 580s mark, which is going to be very tough to break in the near future. It's trading out at 587 now. And, you got to 590 today, 13 million shares, 14 million shares now. Can it slide a little higher? I think he still had a market that was highly short. and too short actually to go down other than the 1343 that we saw. We're now probably going to build cause one more time to attack that 1343, and I suspect in the first part of next year we are going to actually break through that. But the play is probably going to be here in the next few weeks of getting a setup for what I think is going to be a meltdown on some, but not all stocks in the market into the end of the year tax selling for distributions, and as the fiscal cliff looms, or if you're on the cliff, I guess you're looming over everything else. But it is going to be interesting. In the news, InTrade, some people are familiar, is basically kind of a market of a lot of ideas. You could bet on who was going to be president, a lot of other kind of prof bet kind of stuff that you'd see out in Las Vegas. One of the things that they made was an agreement in 2005 that they would not offer trades on commodities like gold and oil. The FTC has filed a lawsuit against them for that, and at the same time, I think just today, they went ahead and issued a letter saying that any U.S. citizens that had InTrade accounts should close them and get their money back as soon as possible. So, InTrade, we knew thy well. But for the most part, it was a bunch of flaky bets. I don't think it's that big a deal. They're going back to England, where things are a lot looser on the way that things are traded. The November consumer confidence hit a 4-year high today, along with housing sales doing very good. The Confidence Board, an industry group, said its index of consumer attitudes rose 73.7, up from an upwardly revised 73.1 the month before, the highest since February 2008. Economists had expected a reading of 73, so probably within the margin of error. But I suspect that when you hit those highs, we actually saw the low in the stock market in March of 2009. You can get awful bullish long before the bottom actually comes in, and I suspect we're probably going to have at least some level of recession the first half of next year. No matter what anybody else says out there, it's very tough to see our GDP getting anything close to the 3% we need to stay out of a recessionary event. Amazon yesterday, money is fairly cheap and plentiful. Just strange that Amazon needs $3 billion, but they went to the market yesterday and got $3 billion in bonds. Company says the SEC filing, it will use the proceeds from the debt offering for general corporate purposes. Basically, they're going to spend $1.1 billion and buy some property. I guess probably not a bad deal. The other $1.9 billion, what are they going to use that for? And we'll talk about that a little when we come back. Give me a call at 877-927-6648, 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, again, you can give me a call at 877-927-6648. And it's kind of quiet right now. Probably a good time to give me a phone call. I know a lot of people had been short the market, and I thought that 1350, I think at least I made it pretty clear that 1350 area was probably going to be extremely good support, good place to go ahead and close your shorts. I know a lot of people have gotten short stocks like Facebook and Apple and kind of wondering what's going on out there. End of the year is always a tough time to be short. And you always have to be knowledgeable about what's going on out there. But it's an easy time, especially when volume gets low, to do and engineer short squeezes. And we're seeing a lot of those out there. And I'll get to that in a little bit. Kind of other interesting articles out there. Taco Bell sold 100 million Doritos tacos in 10 weeks. I brought this up when they first, even about 4 or 6 weeks before they started selling these. And I thought, boy, this is about the smartest idea in a long time. You get the muncher with the the open fourth meal Taco Bell meal. I mean, it had to be a match made in heaven for stoners out here. But you got to think that Doritos and that now, if they can just put together the Twinkie. If I was Taco Bell, I would buy the Twinkie from them, and I think you'd have just a wonderful idea of probably doubling their sales yet again. But it just seems like some things are made in heaven. And Doritos, Taco Bell, just kind of, just junk food that's cheap. Sounds awful interesting to me. GM's going to come out with a second electric car. Not happy losing $200,000 per volt right now. They're pricing in a new car that will start selling out next year with a tax credit of $7,500. It will be about $25,000. And the question is, it's going to be a whole lot less than the Volt, but it will be a totally electric car. And they are not talking about what the range is going to be on that car. In the Tech Insider, I have covered GM's development of some battery technology that should be fairly decent. Just interesting that I haven't found anything about what that range would be, and maybe if this less expensive electric car would actually get the kind of mileage that you need. In my belief, that mileage window probably starts at 325 miles on a single charge. The question of whether or not you could actually get that, I know that the Elon Musk Tesla car is getting better. They were hoping for 350, 375, and it's considerably less than that. So a lot of people are still worried to some extent about how far can you go on one charge. We talked a little bit about Boeing's new 787 Dreamliner, and it's just how good it was a few weeks ago. In fact, even after they got slammed after the fiscal cliff talk and how much was going to be cut out of their military spending, they bumped and bounced back, I think within a day or two, just on the sales of the 787. We've got, a fairly decent, we got kind of a fairly decent, how can I say that? Just advantage. Anyway, Airbus is running derogatory ads against Boeing in the magazines. It's got a kind of a Pinocchio nose on the on Boeing's plane, and I think Airbus doesn't like the fact that they're at least a couple of generations behind now on a lot of the technology. Now that Boeing's gone to kind of what can I say? Just composites, but anytime you can add 40,000 more pounds per trip, it's got to make it worth it. And the new engines from GE give it 10% better gas mileage. It's hard to say that Boeing doesn't have it up and down. Anyway, we've got a couple of phone calls. The first one is Meek from Oklahoma. Are you there, Meek? Oh, he's gone. Okay, we've got Gyro from Alaska. How you doing, Gyro?
Well, very good. And you, sir?
We're already into the break here. You want to hold on through the break?
Definitely, yes, sir.
We'll be right back with Gyro from the Great White North. Yes, I almost forgot Bill and Ted McKenzie. Yes, we'll have to get back to those guys. We'll be back in just a minute.
Heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're back. We've got Gyro on the line. Are you always in Alaska, or are you just Alaska today?
No, I'm here during the holidays for the on Christmas and New Year. I'm here, and then I'll be back to California. I'll go back to California on 15th or 20th of January.
Okay.
Yeah, well, I have a business in Alaska. That's why I'm here.
So it's already dark there 24 hours a day now, right?
No, not really. It's not very dark. It gets the sunrise and sunset between these two is very, very short.
Yeah.
I'm at the very bottom of south of Alaska, south of Anchorage. It's in Kodiak Island.
Oh, okay.
One thing, I have two symbols, David.
Okay.
Is there any possibility you can take care of two of them?
Sure.
Yeah. The first one is Apache, APA.
Mm-hmm.
Today I bought it at 76.60 at 5-day simple moving average.
Mm-hmm.
Do you think that will cross, or it will get to $79, or should I get out of that sooner?
I think it's going to go down test $73.04. It's headed back. It's headed back and would be a really good buy. Could it go higher? Yes. My guess is that it's going to fiddle around here for a little while. Maybe make it up to $80 or something, but that's like a coin flip. I think that the one good trade out of this would be going after the October 4th 2011 low here at $73.04 with 5.1 million shares. If it could get down there and that volume would really get in about 2.5–3 million shares and test that $73.04, that's where your risk reward would be about 5 times better than it is right now. So, you know, it is all risk and reward. Could you win on this one? Yes. I just think that your risk reward would have been 5 times better at $73.04 with a test of that low. Because I think that's what this thing's going after. And actually, the chart is saying this isn't going to be a bad deal. The energy's really started to pull out of this thing on the last leg down. You had one sharp move down here at $74.50 on November 16th. And that says that there's probably an 80% chance that thing fairly quickly is going to get at least test $74.50. So what you know, and then you go down to $73, it's only a heartbeat. And I think that you have a much better chance. Could it rally back up to the gaps higher and then go test it? Yeah, but I mean, to me, the only good trade out of here would be waiting for that test of $73.04. What other symbol do you want to look at?
Lockheed Martin, LMT.
Okay, we're kind of talking about Boeing. Same kind of thing here, except Lockheed Martin has a lot more, you know, they've got some long-term contracts out here, but if anything's going to be cut, it's most likely military spending and really the big budget items like planes. What are you thinking on doing on this? Going short?
No, sir. I bought it at $91 on Friday.
Uh-huh.
Now it's 93.
Yeah.
I'm expecting to get to 94, 95 in that area and sell it. I'm not a long-term holder. I usually keep it for 2-3 days. That's all. As long as it gives me $3–4, I get it.
Yeah, that's fine. I'd sell it right now.
Okay. I'm going to sell both of them. Once I hang up, I will sell both that Apache and that
you can go ahead and hang up. I'll go do the analysis. But I just, you know, the market's kind of weakening here. I didn't do an update. Last time I looked at it, it's 1401. You actually did have some selling. We're at 1,400 on the S&P cash now, 2.25 billion shares. The volume did kind of pick up there from our 2 billion when we started the show. When this thing started to fade, that 1408 or 09 is going to be sharp. I would love to see 1418 or something like that on a jump up or a gap up, and then pull the trigger. This may be it here. I kind of get the feeling that maybe we've got one more attempt to push some shorts. This may be the next little glitch here, but that really gives you a ABC down, and it may not. It may take a long time for this slide to get us back down, but you've got a fairly nice ABC down setting up in the S&P. In fact, I'm going to go ahead and show you here on that. Let's see what we have. Expansions. Let me see if I can find it here. There we go. You've got the start of that ABC, and you got 6.3 retracement into it, which is a little deeper. What I want to do here, though, is do this, which is set that as A, set that as B, and set that is C. So you've got a exactly 50% retrace in the S&P from that 1474 high that happened on September 14th to the 1443 low that we had down there with 4 billion shares. Good opportunity to get that at least retested. And whether or not volume picks up on the next leg back down. That would take you a 1-to-1 ABC down, would take you to 1278 with no problems. What we were looking at, and it probably still will be, is fairly decent resistance at that 1350 level. We'll go back and show that in confluence levels. And that's what I picked up on the first time we went down here. But kind of at the bottom of the next confluence level is that 1270 mark that would take us into an ABC down. There's also a previous low out there at 1266 from the June 4th low of this year, and that's at 4 billion shares also. So you get a few things in there that are saying that on market weakness, we could be setting up our next ABC down. I was hoping to get maybe a little closer to the 618 retracement up here, and we may not get that. We'll have to see how this goes, but I think we could still get a little bit of pop in this market. Could you go short today? I don't think there'd be any problem. You pretty much have a 10-point higher range to know whether you're right or wrong on the S&P. I just haven't found enough stocks that say that I should pull the trigger today. You don't always get great signals on the way down after the market started. You do have that huge resistance level at 1350. We've talked about confluence, which is two different levels on the on Fibonacci retracements, where the largest retracement of one connects to the smallest retracement of the other. So you look at the 681 of one and the 618 of the other, and you actually get a nice little movement from multiple Fibonacci movements. That 1270, what is it, about 1274? Yeah, you get in about 1267 also for the longer one of those. Now that one's a lot more of a congestion zone when they're very thin and neat, like I was talking 2 weeks before we came and tested that 1343 low. We were looking for very strong resistance at the 1350 level. These, over time, work very well. This one is not going to be as good a projection, but you're going to need some decent volume out there, more than 4 billion shares to break 1350. Is that going to happen over Christmas? You've got about 2 weeks for this thing where we still have volume in the marketplace. About the 15th of December, we're going to start seeing shrinking volumes. So you'd really need to get into that level fairly quickly, or that's going to most likely happen next year. The tendency or the bias is always to have a slightly upping market into the end of the year as shorts continue to pull the short positions off and be natural buyers. The question is, with a fiscal cliff issue, if people are not more than willing just to hang on to those short positions this year and let those cards play out. Let me take a quick drink here. But again, thanks, Gyro, for the phone call. But yeah, I think you were kind of on the weak side of those trades, and probably pretty lucky to get out. We'll have to see over the next few days. But I think you made some money there and dared the devil and stared him down, made some money anyway. But as we look at that, there's some stocks out there that could be setting up for some short positions. One I've been watching for a while is Tupperware. This thing's got a nice trading range. And been waiting for this one to come into a little trading range up here in this $65 level. There's been a gap that's 2 times been resistance. The last time, $64.99 on March 14th with 610,000 shares. We also had November 23rd at $65.05. So basically 6 cents higher, half the volume. It's kind of tucked back into this trading zone. So we're still going to have some weakness in some of these stocks. But it's kind of hard to see. But you certainly have a nice trading range from about $65 down to probably about $50 in that range. But you got plenty of time, just like Gyro. You can give me a call at 877-927-6648. That's 877-927-6648. Was talking in the opening monologue about a few stocks moving and some engineered short squeezes. We had one Monday in RIM, giving at least a decent amount of that back today. And, or actually, I guess it started on Friday with a gap up. RIM is pretty much hammered today. Once we found out exactly what the cut was, these guys are down to less than 1.5% of the smartphone market. But when you have a stock that's 40-50% short interest, and a lot of guys with big money that can sit on these shorts for a long time, it makes for a very volatile stock. Do they care that it went from $7 to $12? Well, they don't like it. But they know if they just, I guess they know when they have a sure thing. RIM is one of my Walking Dead stocks. One of the other ones is Sears Holdings. These stocks are astronomically shorted, just like Radio Shack. Everybody knows what the end game is on these stocks. They are going out of business. They're going out of business in, 6 months, 9 months, 12 months, 18 months, the first downturn in the economy. RIM, of course, bleeding money, not getting any better, coming out with their new version of their phone without the keyboard, which is the only reason most people liked it. It's hard for me to think that they've got a chance in hell with Android and Microsoft, well ahead of them. Microsoft having a much better lead in if you're talking about making a single device operable against a smartphone, tablet, and the PC. And, of course, two established marketers in Apple and Google. So, and I won't be surprised to see them back at $9 here by the end of next week. Good luck on finding any of these stocks. Shares short. Most likely your broker is going to ask the same thing he asked the big men of the street to do, which is pay up. At one point, you were paying a 20% premium to short RIM. The premium to short Sears Holding has been as high as 25%. Sorry, I got still a little frog in my throat from the gift that keeps on giving over the weekend. So, we'll be taking a look at that. But anyway, give me a call, 877-927-6648. One of the few stocks that is was just talked up when it came out for its IPO was Five Below. Everybody said this is the most incredible retailer ever to come, better than sliced bread, night baseball. Armand Flint. Anybody remember Armand Flint? He was a kind of a James Bond wannabe in there. But it was kind of a little campier. But anyway, night baseball, sliced bread, all the things that everybody always comes for. This thing was one of the IPOs. It did get as high as a little over, right at $40 on October 1st. It's come back down to earth. This is, not a bad chart out here if you're wanting to keep an eye on these stocks that are IPOing. I haven't checked it out, but you would probably figure 180 days from the lockup. This came out pretty much at the end of June, which means your lockup is probably coming here in just a few weeks. Anyway, Five Below, FIVE is the symbol on that. Take a look, check out the lockup period on it, but I think you're going to see this thing come out fairly quickly. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, we've got a phone caller, and it's Mohammed from Glendale.
Hi, David. How are you doing?
Pretty good. Glendale's in the valley there, isn't it? It's pretty hot.
Yes, it's pretty close to the valley. David, I was wondering if you could take a look at FLS.
Okay, Flowserve. So what are you thinking about doing on this?
Thinking about getting in. Seems like it always pulls down to the 50-day and sort of picks right back up. I mean, was wondering if it would be a good buy at 133. Would it get there, or?
I think that you've got maybe just about 10 points higher on the S&P if you're lucky, maybe 15 points, and then that's probably going to be the top of the market. Is there any reason you would think that, are you thinking that I'm wrong on that call and that the market's going much higher?
I don't think that it might go much higher, but with this fiscal cliff issue, it seems like it's 50-50.
Yeah,
call.
I think it's about like the Greek deal. Basically, they just threw a bunch of money at it today. The Greek deal's over. Same kind of thing is probably going to happen in the fiscal cliff. I suspect that they're just going to kind of give up, which is the easy way. I think that that's going to cause a lot of problems, and any kind of solution they come up is not going to be optimal. But the big problem I have with this trade would be that there doesn't seem to be a lot of indications that this market has a lot higher to go. I would say that the 1270 is a lot more likely than seeing 1440 on the S&P. So my problem would be, could you get 147 out of it, maybe a test of the top? You could. I just don't see putting that kind of risk out here in a market that's going to have declining volume. I'd much rather have probably some other stock that's highly short, that if I am wrong on the market and it does go up, you're going to get a big hit with the short squeeze into the end of the year. I'm showing about a fairly low short interest in this. I mean, that would be some of the things I'd be looking for. In a declining market going into fall, you need to have something that has a lot of short interest, that's ready to take the shorts to the cleaners on lighter volume. And lighter volume on this would just be a sell signal at 147.
Okay.
So I'm not going to say, I'm going to say I just don't understand the risk reward on it right now, especially with the market.
Okay.
Okay.
Well, thank you so much, David.
You bet.
Bye-bye.
And we've got about a minute and a half here left in the segment for the show here. You can always give me a call, or you can email me at path@tfnn.com, and I'll try to answer your questions. Maybe back in the show here. I think I had, did I have one more thing in the news back here that I didn't? We did Airbus. Oh, I did want to bring this up. Hopefully I've got enough time. If you missed it, there was a phony press release from Google yesterday. And it wasn't from Google. It was somebody trying to pimp a off the exchange bulletin board stock. These phony press releases come along every once in a while. The last really big one was Emulex. It was like 8 years ago. I still remember it. They put out a phony press release on this, and of course they caught the kid. He made about $250,000. He ended up spending about 5 years in jail. News is important. But a lot of times when you read something and it seems awful phony, like this press release on this non-existent bulletin board company, generally when they're that bizarre, they are not true. Anyway, see you tomorrow.